All right, so the Federal Open Market Committee.
The FOMC.
Yeah, the FOMC. They kind of seem like they're controlling the entire U.S. economy, wouldn't you say?
Yeah, it's easy to feel that way, right? Like this kind of shadowy group making these decisions that, well, they impact all of us. But
It feels very mysterious, right? Like, how does it work? So that's why we're doing this deep dive. We're going behind the scenes, figuring out, what they do, who they are, and why you should care about any of it.
and luckily, the stuff you sent over, it's got everything we need.
Perfect. So let's start with the basics. What is the FOMC? Like, what do they actually do?
So the FOMC, they're like the steering wheel of the U.S. economy.
Right.
But now hold on, before you picture like them setting the price of milk.
Right, like they're micromanaging everything.
Yeah, exactly. It's more about setting the overall direction, the bigger picture, using a few key tools.
Okay, I'm listening. What kind of tools are we talking about?
Well, one of the big ones is interest rates.
Oh, yeah, those things. That's like, am I going to be able to afford that new car? Am I going to be able to buy a house?
Exactly. So when the FOMC, when they raise interest rates, borrowing money gets more expensive,
Yeah.
right? House, car, credit card, all of it.
Yeah.
Lower rates, borrowing gets cheaper. And that, believe it or not, that influences, well, everything. How much people spend, it impacts the whole economy.
Wow, so it's all connected.
Oh, yeah.
What's the other big tool they use?
This one's called money supply. Think of it like this. The FOMC kind of controls how much money is actually flowing through the economy, right?
Okay, so if they let out too much money, is that how we get inflation? Like too much money for the same amount of stuff?
You got it. And the flip side, right? Too little money circulating and things stagnate. Economy needs that sweet spot, just right.
Yeah, that sounds like a pretty high-stakes balancing act.
It is. It is. And what's interesting is that this whole structured FOMC system that we have now, it didn't just appear overnight. Back in 1922, it was much more informal. Like imagine a casual group of people, right, just deciding the fate of the U.S. economy. Maybe over tea.
No pressure or anything. I bet those were interesting meetings. So when did things get a little more official?
The Banking Act of 1933. It officially established the FOMC as we know it, gave it more structure, more purpose. And speaking of structure, we should probably talk about who's actually in this group.
Yeah, because it can't just be anybody, right? Who gets to make those calls on interest rates and money supply?
Right. You might picture a room full of, economists and ivory towers.
Yeah.
But it's more nuanced than that. The information you send, it really highlights how the FOMC is set up very intentionally. To start, there are 7 members from the Federal Reserve Board.
Okay, that makes sense. They're kind of like the big leagues of finance, right?
Exactly. Then you've got the president of the New York Fed, always has a seat at the table. And that makes sense, New York being a global financial hub.
Yeah.
But here's where it gets interesting. The last 4 spots, they rotate among the presidents from the other regional Federal Reserve banks.
Wait, so it's not all Wall Street. They're actually taking into account what's going on in other parts of the country.
That's exactly right. And make sure that different economic perspectives are represented. The economy in California might look very different than, say, the economy in Ohio. You know what I mean?
That's so interesting. So they've got their finger on the pulse of, different regions, but how do they choose who gets those rotating spots? Is it like names out of a hat?
Not quite. Not quite. There's a system to it.
Yeah.
So the remaining 11 banks are split into 4 groups, right? And each year, one bank president from each group gets their turn on the FOMC.
Okay.
So everyone gets a chance.
Gotcha.
And even those not officially on the FOMC at a certain time, they can chime in, be part of the discussions,
Okay, so you've got this group, all these experts from different places, all this data. What happens when they get in a room together? Is it like, are there fistfights? Is it tense?
It's going to be a little tense, right?
Yeah.
I mean, you got a room full of brilliant minds, but each with their own take on the economy. And it is serious business. Attendance is tightly controlled.
Yeah.
We're talking about decisions that can impact, the entire world, the global economy.
Right. Because if even a whiff gets out that, oh, maybe they're considering raising interest rates, the market's going to go crazy.
Exactly.
Oh, the pressure. So how do they go through all this information? How do they actually make these decisions?
Okay, so picture this. It's like a well-rehearsed play, right? First, meticulous preparation. And I'm talking meticulous. Teams of economists compiling data, creating detailed reports. It's intense.
Wow. So it's not just them looking at a couple charts and being like, yeah, that looks good.
No. This is intense homework. And then comes the main event, the discussion. Each member gets to share their outlook, their policy ideas. And remember, these are experts, all these different backgrounds, different regions. I'm sure those conversations get pretty interesting.
Oh, I bet. But they have to come to some kind of agreement, right? They can't just have, like, conflicting ideas about what's going to happen with the economy.
You're right, you're right. The goal is a united front. They aim for a consensus on how to proceed. Basically, a clear direction for the New York Fed, because they're the ones actually implementing the FOMC's decisions in the open market. Like, okay, so the FOMC sets the course, and the New York Fed steers the ship.
A well-oiled machine. But you said aim for a consensus. Do they not always agree?
It happens,
Yeah.
which makes sense. These are incredibly complex issues, lots of factors at play. But that's the whole point, right? Having those different voices, it makes for a more informed decision. And honestly, reading all this, it makes you realize, like, the FOMC, they have a lot of power.
They do. And you know what they say? With great power, well, you know the rest. There's got to be some criticisms about how they operate, right?
Oh, absolutely.
Yeah.
A big one is this idea of interest rate targeting.
Yeah.
Basically trying to, like, set interest rates at a certain level to try and get the economy to behave a certain way.
Right.
Sounds good in theory, but some economists, they argue that keeping interest rates artificially low can actually make inflation worse.
Okay, now walk me through that. How do low interest rates make inflation worse?
Okay, so think about it. Low interest rates, that means it's cheaper to borrow money, right?
Right.
So businesses, they take out loans to expand. Maybe you finally buy that new car,
I know. Sounds good to me.
right? More spending, more economic activity. But here's the thing. If the economy gets too hot, like demand is higher than supply, all that extra money floating around, that leads to, you guessed it, inflation. Too much money chasing, not enough goods, and prices go up.
And suddenly that new car doesn't seem so affordable anymore.
Exactly.
Yikes. So if interest rate targeting is so controversial, what are the alternatives?
Well, one that keeps coming up is stable growth targeting. So instead of focusing on hitting a specific interest rate, the FOMC, they would focus on trying to, maintain a steady, sustainable rate of economic growth. Not too hot to cause crazy inflation, not too cold to cause a recession.
Yeah, like a Goldilocks economy.
Exactly.
I like it. What else?
Another option, inflation targeting.
Mm.
Pretty straightforward, the FOMC. They would pick a specific inflation target, let's say 2% per year, and all their decisions, based around hitting that target.
So instead of inflation being one factor they consider, it's like the factor.
Exactly. Now, whether or not these alternatives are better, that's up for debate, right?
Right.
But these are the kinds of conversations that are happening. And just knowing about these different approaches, I think it helps you cut through all the noise, all the headlines, and really think critically about economic policy.
Totally. It's not just as simple as the FOMC sets the interest rates, the end. Like, there's so much more to it.
Right.
And something that really stood out to me going through all this is how secretive the FOMC has been historically.
Oh.
But it seems like recently there's been this push for them to be more transparent.
You're right. You're right. For a long time, the FOMC, they operated in the shadows.
Mm.
But that's been changing, especially under former Fed Chair Ben Bernanke. He really pushed this idea, and a lot of economists agree, that the Fed needs to be more open, more communicative, to keep the market stable, to manage expectations.
So instead of everyone freaking out every time the FOMC makes a move, it's like they kind of know what's going on. They know how to plan.
Right. It's about making things a little less mysterious. And in fact, the Fed now publicly releases its projections for future inflation. That's a huge change.
It's like they're saying, hey, we're not just winging this. We actually have a plan, and we're going to give you a little peek behind the curtain.
Exactly. And that actually raises a really interesting point. Even though they become more transparent, they're still trying to figure out, how much is too much?
Right, because if everyone knows exactly what the FOMC is thinking, wouldn't that be bad? Wouldn't that cause even more problems?
Exactly. It's a delicate balance.
Yeah.
And it really makes you think, how transparent should an institution as powerful as the Federal Reserve be? It's an ongoing debate.
Yeah, it's a tough one. And I gotta say, going through all this, it's kind of overwhelming.
Right.
All these factors, these potential consequences, it's like, man, the FOMC, they have a lot riding on their decisions.
They do. They do. And, it's easy to get lost in the weeds a little bit, the interest rates, money supply, all the technical stuff. But we have to remember, it's real people, right?
Yeah.
Their lives are impacted by these decisions.
It is. It's people's livelihoods, buying a home, starting a business, their ability to even just put food on the table. So knowing what we know now about how the FOMC works, how powerful they are, what do you think What should we be paying more attention to? Like, what parts of their work deserve more scrutiny, more public debate?
That's the question, isn't it? I mean, how much influence should the Fed have? Where do we draw the line? When does it go from them providing stability to maybe, like, you know, stifling innovation, distorting markets?
Yeah, it's not always going to be a clear-cut answer. And what about the rest of the world? We talked a little bit about foreign exchange, but their decisions don't just affect the U.S., right?
No, not at all. The global economy is so interconnected. Something the FOMC decides, it could change currency values, trade flows. Like, the ripples are huge.
It's a lot of responsibility.
It is. Definitely deserves more scrutiny, more discussion.
For sure. Well, my brain is officially full.
As always.
We covered so much today from, like, the early days of the FOMC to, well, now, they're a global economic powerhouse.
We went deep.
Mm-hmm.
But hopefully, anyone listening, they come away not just understanding what the FOMC is, but also feeling a little more empowered,
Yeah.
Like you can think critically about the role they play.
Absolutely. And for our listeners, if you're anything like me, you're probably like, okay, I need more. I need to learn more. Don't worry. We got you covered. Be sure to check out the external links.
So much good stuff in there. Detailed analyses, deep dives on specific policies, all of it.
A great place to start for anyone who wants to, go beyond just the headlines.
Totally.
So next time you hear the Fed or the FOMC on the news, you'll know what's up.
You'll have that context.
Yeah, and you'll understand how those decisions, how they actually impact, everything.
Exactly. You'll be able to have those conversations, be part of that discussion about our economic future.
Love it. Well said. Knowledge is power.
Always.
Until next time, everyone, keep diving deep.